My name is Brian Nielsen, and I'm the Executive Director of the Blockchain Academy, and I want to welcome you to this second video on trading cryptocurrencies. So there's a big question about that a lot of people have, and that is, how can I invest in cryptos? Good question. Well, the idea, first of all, is to understand that there's a very large market. So currently what this is showing is that the current crypto market capitalization is about $470 billion. It's not exactly a small market. It actually is quite large. But what this graph is showing us is the size of various cryptos and how much it is traded on a daily basis. And here you can see that Bitcoin has probably about 36 to 37% of the overall crypto market. You see it followed up by Ethereum, and Ethereum has roughly 19% of the market. Bitcoin Cash has a little over 5, and Ripple has a little over 9. So you're starting to see that there's a lot of size and depth to this particular market, and that means that there's liquidity. That doesn't mean that it'll always be, but at least for now, that's what we're having. The next question that you should be asking is well, how many cryptos are there? Well, it really depends. It depends on how you count them. So currently there's about 1,800 different cryptos that are actively traded out there. And that goes all the way from Bitcoin, which is very, very large, the largest of them, down to some very, very small cryptos. And every month about 200 or 300 new cryptos are coming online, literally. And what you're seeing is the ability to then invest in them. And of course, some of the new cryptos have valuations that are less than a penny, a tenth of a penny, or a hundredth of a penny, while of course Bitcoin is currently about $11,000. But what you can see is that there's a huge, huge amount of cryptos that you can actually trade in. The question though that you should kind of be thinking about is, how much money do you want to invest, and how much risk are you willing to take, and how diversified do you want your crypto portfolio? Well, the first question is this: how much money do you want to invest? There is a lot of people out there who recommend that you should not invest in cryptos anything more than you're willing to lose. Some people have estimated that to be somewhere between 2 to 5% of your overall net worth or your portfolio value. So arbitrarily, if that meant that you had a $100,000 portfolio, that you should be investing somewhere between $2,000 to $5,000 in cryptos. And that's kind of, though, a subjective aspect of it. There's a lot of people out there who think that you should be higher. There are some who've invested at a low amount, and all of a sudden, over time, through appreciation, they need to rebalance their portfolio because now cryptos have a valuation of maybe 25 or 30% of their overall portfolio. But for people, I recommend is that start with just a couple of $1,000s. And the reason why is how much risk do you want to take? Cryptos are notoriously volatile instruments. The prices go up and down. And they don't go up and down slowly like in the stock market. They go up and down dramatically. So in late December 2017, Bitcoin, for example, was a little over $20,000. It fell down within like 3 weeks to $6,000. Now it's back up to around around $11,000. You can see that there's a huge amount of volatility. So if you bought high and you now low, you've lost a lot of money. So if you bought at 20 and it's currently, as an example, 6 like it was a couple of weeks ago, you've lost basically 60% of your entire portfolio value. So the thing that you have to understand is when you choose to invest money in it, you have to understand how much risk are you willing to take. The best way that I try to explain to people is this is what like the penny stock market is. There's a lot of volatility. There's not a lot of information that's available. The only difference is that in the penny stocks, there's a small market caps and small amounts of trading liquidity. In the crypto markets, you have these huge amounts of trading on a daily basis. Then the next question is how do you want to diversify your crypto portfolio? Do you want to have some cryptos that have a large market caps and some that have small market caps, just like what you do in a stock market portfolio? The only difference is you have to understand that the smaller the market cap, the more volatile they can be. Now that means opportunity when prices increase, but it is also very dangerous when prices decrease. So the next thing that you have to figure out is this, is you have to figure out, well, what are cryptocurrencies to begin with? And basically what I've broken them down to is into three categories. One is, of course, is currencies. The second is what they call a utility token. And the third is called a security token. And let's go through each of them. So of the currencies, of course, Bitcoin is probably the most famous of the cryptocurrencies. You have Bitcoin Cash, you have Litecoin, you have IOTA, you have Monero, you have Neo, you have Tether, and of course you have Dash. And these are classical cryptocurrencies. They're designed to be currencies, and as a result, they're traded as such. The second category, of course, are what we refer to as utility tokens. Now, a utility token, if you go back to your childhood when you went to an arcade and they gave you these little tokens that you had to use in their arcade machines, that's exactly what a utility token is. It is something that you have to use in a specific venue or a specific area. So if you look at Ethereum, you use Ethereum to pay for the gas to complete your transactions. So Ethereum is a platform, and in order to feed the platform, you have to spend Ethereum for gas to actually complete the transactions. Ripple is a messaging system, and you're using the Ripple currency as a method of payment for that messaging system. You have Filecoin. Filecoin is a great thing. They raised $250 million, and basically what it amounts to is it's the way to pay for you offering your hard disk space for the download and repository and archival aspects of someone else. And you're paid for this thing. So it's really not something that you can't, I mean, there are venues, there are places that will actually accept all of these types of cryptocurrencies, but the design of them is to be used in a specific manner, in a specific way. And that goes for EOS and Steam and BitShares. The next kind of tokens, of course, is what we refer to as security tokens. And these are represented in the fact that you actually own something. So like the cryptocurrencies, you don't own a part of a company. So like if you own Ethereum, you don't own the Ethereum project. You don't own anything on that. But here you can have, like with Ripple, you actually can have a part of the company. The same would be true for Filecoin. And in essence, what it comes down to is that these security tokens, and you're going to see a lot more of them now going forward due to regulatory aspects of the SEC. But basically, they're going to be more like equities. So you're going to have an ownership interest in that particular company. And that's how they're going to be issued, is these security tokens. And a great example is, of course, T0. T0 is the investment arm and platform that is being done by Overstock.com. And basically what you're seeing there is the ability to actually invest in it. Another good example of this is the new Petro coin that's been issued by Venezuela. It's backed by the oil, so there's a security or equity position in it. It's backed by the oil that Venezuela produces. So that gets us to then the question of, if we know how much we want to invest, and we know that there are different types of currencies, well, where do we trade these things? And that really comes down to exchanges. So let's talk about this. There's basically 80 different exchanges. There's more always coming online, but basically they're regionally specific or country specific. They allow for different types of cryptos to be traded, different amounts of them. And again, there's about 1,800 to 2,000 cryptos at any one time available to trade, but not every exchange allows you to trade them. There's a different account opening procedures, and there's different ways to fund your account. So some of those ways that people fund it is they set up an ACH with their bank account, and they can do a wire transfer, and they can do, say, a credit card funding. The first one we're going to talk about is Coinbase. It is a US-based exchange. They are opening about 20,000 new accounts every single day. Absolutely amazing. Their current amount of accounts exceeds the Charles Schwab accounts. They are growing by leaps and bounds. They only allow for 4 cryptos to be traded: Bitcoin, Bitcoin Cash, Litecoin, and Ethereum. There's a great amount of insurance, a great amount of security surrounding this particular exchange. You can't do leverage on it, but it has the one attribute that makes it so desirable, and that is ease of use. Our next exchange is the Kraken. It is also US-based out of San Francisco. It allows for 18 different cryptocurrency pairs to be traded. It provides both basic and advanced trading options. So if you're a more sophisticated investor and want to trade it more actively, the Kraken is a good option. It also allows for leverage on certain currency pairs. That means that you can actually borrow money to actually leverage up the risk, both pro and con, for those trading pairs. It also has a great amount of ease of use. Our third exchange is Binance. It is China-based and it primarily serves the Chinese market, but you can open up an account and they have an English platform so that you can use it. It allows for 113 crypto pairs to be traded. It has, of course, both basic and advanced trading options. There is leverage on certain pairs, and it is known for its ease of use. The next one is Bittrex. It allows for 475 cryptocurrencies to be traded. It has also basic and advanced trading, and there is leverage on certain pairs, and of course it too has and is known for ease of use. Here's an exchange that is new. It hasn't quite launched, but it is coming up with some amazing numbers. They announced that they were going to allow for cryptos to be traded on the Robinhood platform, and over 1 million people instantly, within 2 or 3 days, signed up for this option. What's kind of interesting about it is, of course, is that it's US-based. We don't know which crypto pairs it's going to allow us to trade. There is insurance for the accounts, but the thing that's really cool about Robinhood is they have 0 commissions or 0 fee trading. So you'll be able to basically trade. Now, we don't know what the price differential is going to be because all the other exchanges have the normal exchange fees that are associated with every trade, and some of them can be quite high. If you're trading Bitcoin, those fees are very, very high on all the exchanges. But Robinhood is coming out with this, and I think that it's going to be really quite fantastic. The thing that's cool also about Robinhood is it appeals to already the millennials. So if you're a millennial, this might be the easiest way for you to access and start trading cryptocurrencies. So then the next question is okay, so now you've told me about the exchanges. How do I go about setting up an account? Well, this is basically the sign-up process, and almost all of the exchanges follow this same procedure, and that is that you need to provide your name, your address, your age. You have to provide some form of documentation as to who you are. So some of them will require you to take a picture with your driver's license and the date. Some of them will require that you send in a copy of your driver's license front and back, and even your passport. And this is all revolving around the know your customer. It's very, very important. These exchanges are coming under a lot of regulatory and legal requirements, and as a result of it, they need to know who the customers are who are participating on their exchanges. So if you're going to be trading through these exchanges, realize that this is a process. Now, some of these exchanges also have a multi-step process. So when you first open an account, it will allow you to trade up to, say, it'll be different for each one, say $5,000. If you want to trade more than $5,000, you have to go to a second level, and there's different aspects for signing up to get these additional rights and permissions to trade. But basically, the way you're funding it, of course, is you're giving them access through ACH to your bank account, or you're doing a wire transfer into the exchanges, or you're doing credit card fundings. Now, the thing about credit card fundings is this, is there's a lot of problems currently around it. When the crypto markets reached its high in December 2017 and then fell to its incredible lows, about a 60% correction in late January. What you saw is a lot of people had had invested in cryptos using their credit cards, and now they were down 60%. There's a lot of credit card issuers who are now saying that they are not allowing for funding of crypto accounts through their credit cards. So that's an issue that's kind of going away, but at least for now, there is still a limited amount of availability to fund your accounts with credit cards. So then that gets us to the next question, and that is, what is a wallet? Well, a wallet is, there's a couple of types of wallets. Let's first go through them. There's the hot wallet and cold wallet. Well, a hot wallet is something that's connected to the internet. And it comes in a number of different forms that we're going to cover in just a second. The cold wallet is something that's disconnected, and that also comes in a number of different forms, and we'll talk about them too. But you also have the public and private keys. Well, your public key is, of course, the crypto key that is available for people to send you money. But for you to actually do something with it, you need your private key. So you need to have both these keys to be able to do any transactions, whether you're making a payment or whether you're receiving money. You need to have these things. And basically, different wallets manage these things differently. You have the multi-sig wallet, which is kind of like a shared open bank account. You have a number of people who have to provide their authorizations for these signatures. Or you might have a wallet that will manage your accounts at different exchanges. And of course, you have a multi-currency wallet. Now, this is kind of important because if you were denominating your currency, your cryptos, say in US dollars or euros or yen or the South Korean won, these are important for you to understand that these wallets have these capabilities. So let's kind of go through them. The online or web wallet, and this is basically you're accessing it through your browser or through any browser. What's cool about it is it's probably the fastest way to complete transactions. It's also ideal for holding small amounts of crypto value, meaning that whatever your portfolio is, you might want to be able to, if you have a very large portfolio, let's say you're the Winklevoss twins, you're not going to have everything on your exchange. You're going to have a lot of things in other types of wallets. But it's ideal for holding small amounts of crypto. It allows for multiple cryptos to be traded on it. The disadvantage is that it's susceptible to malware and hacking. There's not a lot of security at some of these exchanges. The more reputable exchanges have increasing and high amounts of security around them, but they're not flawless. And of course, the other thing is that it's not necessarily in your control. The next, of course, is we have the mobile wallets. And what's cool about them is they're great for sending payments on the fly. You're going in, and let's say you want to pay with Ethereum or Ripple for your coffee, you can basically do it right there instantaneously. There's QR code scanning. It allows for you to trade multiple cryptos. They're very, very easy and convenient. The disadvantage is that phones are, of course, notoriously insecure devices. And that's a problem. And they're also open to malware and keylogging, which is, depending on which phone you have, there's different security issues that relates to each one. The other thing is that if you lose it, you may not be able to recover some of the things that you have unless you've backed it up. So there's a potential loss of your entire portfolio, because if you've lost your private key, it's gone. There's no recovery method. Next, we have desktop wallets. The advantages is it's easy to use. You could have it as a possible cold storage option by just removing it from the internet, disconnecting it. There's a lot of people who say that I put my cryptos in cold storage, and that's either on a thumb drive or a hard drive that they actually physically remove from a computer and put into a safe deposit box. That's why they call it cold storage. But the keys are local, so that's an advantage. So it makes everything easy and, of course, a little more secure. Of course, the disadvantages is that security and privacy issues when you're connected are always going to be there. Of course, that means then you have a risk for computer repair people. You have, what do you do if your computer dies and everything's on that wallet? That means you've lost everything. Again, the one disadvantage of all cryptos is that you can lose everything if you lose your keys. Of course, computers have malware and keyloggers as a possibility, And also there's sometimes when you use these desktop wallets, there are some strange privacy permissions that are around it. There hasn't been a coalesced approach to managing privacy on them, at least at this point. Then of course we have hardware wallets, and the advantages of this is that they're of course very easy to use. You're just plugging them in. You can use these, as I mentioned, as possible cold storage options because you can just disconnect it from the computer and keep it completely away. Of course, private keys are also local in this particular case. The disadvantages, of course, is that once it's connected, it is theoretically at risk. People could steal it. What happens if you lose it? Of course, you've lost it all. And again, it has some strange privacy permission options that haven't been all uniformly created. Thank you for watching this video on cryptocurrencies. This is video number 2. If you missed our first video, you're welcome to go back and watch it. It covers things like what is a currency and why cryptocurrencies were even created. Of course, this particular video, we talked about how you invest in cryptocurrencies. But our next video is really some of the trading strategies that you can actually employ when trading cryptocurrencies.